Samuel, thanks very much for joining us. Just wanted to pick up with you in terms of the student housing markets. How do you see the market at the moment? Just give us an update on your views.
Student housing asset class has been impacted like all other asset classes by this COVID development. On the other hand, this asset class has been probably better performing than other classes when we compare it to hotels, office, retail, etc. The demand, surprisingly, despite all the COVID challenges, the online and hybrid education and the mobility restrictions, remain only about 5 to 15% less when it comes to occupancies compared to last year, because there are many stayovers, many renewals, many more than any year before, more domestic students and a strong population of 18 years old in many countries. And also many students, as the reality showed, consider their study destination as home. So they moved to their city of study, even though that the education is online. So the asset class is enjoying relatively reasonable levels of occupancies in the United States and Latin America. So in Americas it's about 90%. Probably UK and Ireland are doing not as well as Americas or Europe, as they are quite dependent on international students that might not be able to arrive in such a cohorts. Southern Europe, so France, Spain, Italy, reasonably well in the zone of around 60 to 80%. And then when it comes to West, North, and CE Europe, they are doing very well and over 90% that our research and mystery shopping shows.
How are you seeing this play out in terms of the real estate side, Samuel?
We have seen minimum distressed assets or refinancing need, perhaps less than 5%, I would say. Haven't seen any divestments yet, even though we anticipated about 5 to 10% divestments. However, 2/3 of investors plan to have new investments. And we see in this asset class, and we see opportunistic investors. So those who were contemplating about investing in this asset class are now arriving more dedicated, more committed. And they are actually looking at distressed asset classes like hotel for conversions, because this asset class has always had the challenge of finding right opportunities. So now, basically, already this year, $12 billion have been transacted, which is only 42% year to date less. So we expect that by the end of the year 2020, we will be at par or over 2019 in terms of transactions in student housing asset class.
Hopefully the health crisis will begin to be solved in some form or other. But how do you see the outlook for the markets going forward into 2021?
In last 70 years, there were more students in and after every recession. So, of course, during the pandemic times and restricted mobility, we will be in challenging times. But once this renews, there will be more students, more demand, most likely more investments. The yields are stable. The LTVs have been probably impacted by 5%. But when we look at the overall development on the market, even if 1% of the overall real estate investments moved towards student housing, which seems to be likely, the asset class would grow by 50%. And we would be looking at about 20 billion transaction level in this asset class per annum. And we have about 100,000 beds in a pipeline, out of which 50,000 beds are already in construction. So about 6 billion new investments on top of the transactions. So we anticipated there will be more capital, not as many opportunities, so the capital will become more competitive.
Really interesting market. There's been a lot of changes, I think, in terms of the perception of investors from the start of the health crisis going forward. So great to catch up, Samuel. Thanks very much.
Thank you, Richard.